Welcome to our final episode of Launching a Business in 3 Days. You can see that Jordan has created, if you're watching on YouTube, a lovely and specific background for today's conversation. We're talking about something that you might not get super excited about, keeping the finances of your business. The thing that excites you might be the making the money part.
I get excited about this stuff. This is exciting for me. So.
Oh, good. And so today we're going to go through with Jordan all of the financial basics you need to know to get your business off the ground in 3 days, but also to maintain it, operate it, make sure you're turning a profit in those first few months, if not up to a year. Yeah?
Lovely.
Okay.
I'm ready. I hope everybody else out there is ready, because I completely understand that accounting puts a lot of people to sleep. So hopefully we can do better than that.
Love it. Okay, well, give us a little bit of your background, your experience in your career, but also a little bit of, you mentioned to me earlier how your wife runs her own business. So I'd love to hear a little bit about both of those.
Sure. My background, I graduated from the University of Utah with a bachelor's and a master's in accounting. I won't tell you how long ago, but I started it's crazy. I'm old. Anyways, so started out at Grant Thornton Public Accounting, got my CPA license, was there for 3 years, dealt with a lot of really large private and publicly traded companies. From there, went to another firm, just a kind of a smaller regional firm called Danes Goodwin, located here in Salt Lake. And was there for another 4 years. And then I knew somebody that was in the finance department here at Weave. He and I had been in touch over the years, had previously worked together at Grant Thornton, and a position opened up. They needed some additional help with accounting, and this is almost 5 years ago. That's how long I've been with Weave. Yeah. And I looked at what Weave was doing, and it was the opportunity I had to jump on.
Yeah.
What's funny, because when he first talked to me about Weave, the way it was first discussed was caller ID for dentists, and I'm like, I don't know if that's going to be the kind of huge opportunity I need to jump on. But once you see like what our product is and what it does and how it really helps businesses, it was, yep, I'm in. Let's do it.
Yeah, and how we've been able to service not just dentists, but a lot of service-oriented businesses in general.
Right.
Yeah.
So it's been a ride, but it's been a 5-year ride so far, and we're still going strong. So.
Yeah. I mean, I'd love to hear what you're able to share about Weave's growth in those 5 years, because I feel like it's really kind of maybe applicable, at the very minimum interesting to people listening, because of maybe especially employee size we were at back then, and how revenue has since grown.
Sure, definitely. So when I first started, again, going back to 2015, that first year, I remember we hadn't done an audit yet. And people out there that don't know the accounting world, when you have to start providing financial statements to investors, whether it's a bank or equity venture capital investors or whoever it is, you have to go through a financial statement audit. And I remember that going through that first audit and looking at all the numbers and doing everything by ourselves. And then not just having to do an audit, but you have to worry about customers when you only have 2 or 3 people on the finance team. So I remember going through the audit and just being overwhelmed by all the audit work. And then I have to answer customer emails, and I have to answer, billing questions, and I have to process credit cards. And then Brandon and the executive team have questions. And so we're trying to scramble and wear all these hats. When you're in the startup world, it's, man, back in 2015, it was rough going for us little finance people.
So what you're saying is that you have a unique perspective and experience in how to approach keeping your finances.
Oh yeah, definitely.
So that you don't have to go through these pretty audits and be like, what is this? What does it mean? How do we? Because keeping a really organized book, even early on, and having a good guideline there can be so highly impactful, because it can prepare you for these later things, which is why you were doing that then, right?
Yep, no question.
Yeah.
And so you asked like what was our financial state, what was going on? So
and how many
it was just
employees
funny
were,
as you asked that, and I
yeah.
kind of took a little tangent there, thinking
Yeah.
back to what it was like back in that time period. So I didn't quite answer the question, but what you know, that first year, I remember we did about $3.7 million in revenue.
And we were how
Over
many
the
strong
whole. What's
employees?
that?
How many employees?
When I first signed on in September, we were about 90.
Okay.
90 employees, and again, throughout the year 2015, 3.7 or $3.8 million in revenue.
Well, and just some extra context too for listeners. I mean, that was a year after Brandon took Weave to Y Combinator. So you look at how fast a company can go. Like, I mean, Y Combinator's incubators of incubators, like that was Brandon and Clint, or I forget who exactly went with him, but you think of like everyone that will be jumping on this and launching a business in 3 days and thinking in a year you could potentially have 90 employees. That's pretty cool.
I mean, these guys have put together something amazing, and they definitely have faced a lot of trials, a lot of moments when they probably could have or wanted to give up, you know?
Yeah.
And the Y Combinator thing was very fortunate. Y Combinator, again, for those that don't know out there, is basically the Harvard of tech incubators. Really difficult to get into. But Brandon, Clint, and Jared, our founders, they killed it. They really were able to show the investors what this company could do if they had the funding, and everybody could see it. So
yeah,
here we are.
So back to the original question, maybe even starting back again with the audit.
Yeah. Yeah, I know that wasn't your question. Again, just
no, but
we live in 2015, which, you know, was a very, very stressful time for us finance people. But anyways, we got through it okay. $3.7 million in revenue for 2015. When I came on, we were about 90 employees.
Yeah.
We are now about 600 employees, and we're doing over $6 million in revenue every month. Last month, past $6 million in revenue. So it's been the growth has been crazy. It's been a lot of fun to be on the ride. So it's been a lot of work, but a lot of fun.
Yeah. So this will be really a great conversation, I think, too, because of that perspective and experience you have, that as you are setting up your books and your finances, Jordan, you have a lot of great advice to give in terms of how to do that so that you can prepare yourself for some of these larger moves. So first step you've got is taxes, right?
Yeah, definitely. And I wanted to make sure, I think Jake has talked a lot about this, and we talked about it in our first video, is understanding the why. Because if we don't understand the why, I mean, let's be honest, the accounting is probably, unless you are an accountant, that's kind of your thing. Keeping the books is probably one of the last things on your mind.
Yeah.
But if you do want to have a successful business and you want to be able to do things like Y Combinator and raise funds and not get yourself into trouble, it is going to be imperative that you're able to keep the books and keep those numbers straight.
Well, right? And to your point, right? Like whether you're tech or not, whether you're looking for funding for more like a VC route or even a bank route, right? Like they will look at, isn't it the past 2 years at least?
Yeah, typically. And in some cases 3. In some cases they want to see all the way back. It completely depends. When you get in these meetings with investors, it's interesting the different things they ask for. And for people that are just starting a business, the information that you'll want for a seed round, typically, you know, I'll kind of go a little bit through what rounds of funding look like if you want to get into that cycle.
Yeah.
A lot of people out there may be looking at a business and just saying, you know what, I want to have a 1 or 2, 3 person consulting business, and that's as much as I want to do. I just want to have something that provides steady income. I'm not really looking to expand and go international and this kind of thing, and that's completely fine. You're not going to have to worry about that. But for somebody who has a mindset similar to Brandon's, right, or you're looking at a tech startup, if that's your mindset, then you're going to want to know this kind of stuff. But for your initial seed round, which is when you get beyond kind of your family giving you some money just to kind of get up and going, your first round of funding is the seed round, which for us would have been Y Combinator.
Yeah.
That was our first kind of not family type of investment that we got.
Yeah.
Right. So your seed round, to get that going, you need to provide some financial data that people can sink their teeth into, and that they can really, they can understand that, you're not sitting on your butt at home just putting numbers in an Excel spreadsheet with nothing to back it up.
Yeah.
You really do have something going on. You don't necessarily need to have all of the financial metrics that a VC could possibly want. You don't need to have all these incredible fancy accounting systems and FP&A systems. You don't need to have all that stuff, but you do need to have something that you can prove out to investors to show, here's how my company has performed for the last year, or maybe the last 2 or 3 years. And I can back it up. I can show you my bank statements. This is real, right? And here's the numbers. Here's a few numbers on the markets that I'm attempting to go into. And we think we have a shot here. And at that point, especially in the seed round, you got to kind of put that sales hat on as well, right? Not to be a finance person, because at that point, you haven't completely proved out that you have an extremely viable business. Yeah. So, but yeah, you'll still need to have some of this stuff together, even though, again, going back full circle, you may not be an accountant. It may not be what you want to do, but if you want things to progress to that next level of an expanding tech company, or you want to go public at some point, you're going to need to be able to talk the talk here.
Yeah, so what would you say some of those initial, like if you're setting up a blank, empty Excel sheet, what are some of the things that you need to make sure to track?
Okay, great. Excel. And yes, Excel is going to be your very best friend. I am still in Excel all day, every day. So talking about Excel, what might be helpful is I do have an example of okay, going back to your question, right? You asked your wife, well, I'll tie this together.
Okay.
Because you asked the question of, tell me about your wife's business, right? Your wife has her own business, and my wife's business is similar to the consulting, right? So my wife is a mental health therapist, and she has her own business. She has 4 or 5 clients. Maybe she'll get to 10 at some point. Maybe she'll have an employee or 2, but she's not looking for global domination in the So I'll just give you a quick look at, this is not her personal financial statement that I built. This is at a minimum what you probably would want to do. If you were going to set up your own business, you didn't want to get into the minutia of an accounting system. You just wanted to be able to track what's going on and be able to prove out some numbers. Let me share my screen real quick. Is that okay?
Yeah, and we'll post an example of this on the blog post for this episode as well.
Okay, share screen. All right, how we doing?
I got you.
Okay. This is, can you see everything? Is everything blown up to a proportion that's not too small? You're not squinting?
Yeah, I can see it.
Okay, great. All right, so my wife's business is not Positive Growth Therapy Service, has a different name. Again, I want to keep her completely separated from this. And so this is just, I've pulled this, changed the names and all that kind of thing in the financial data, but nevertheless, it's still applicable. Your basic income statement, right? And when you're talking about accounting, you have 2 routes of basically the overall method of accounting. There's cash accounting and there's accrual accounting. Cash accounting is what people typically start out with when they're starting a business.
Yeah.
And all that means is cash in the door is income and cash out the door is an expense for the most part. When you get into accrual accounting, you have to record all these things that you may not pay cash for months and months from now. You have to record receivables from clients who you may not be getting money from for a long time, but you need to know it's there. There's a lot of non-cash, what are called liabilities and receivables, right, that you have to put. And it's not just what happens in your bank account. But again, for starting out, this is kind of the baseline of what you probably want to be doing to make sure that you know what's going on in your business.
And this is the cash system.
This is the cash system.
Okay.
So this is a very typical income statement, just by month, right? And if you get somebody, if you're not an Excel wizard yourself, you can definitely find somebody to build this out pretty quickly. This is not crazy to build. So you have a monthly income statement here. Here are the classifications on the left side. The top section is your income in my wife's business case in a therapist, a therapy business, right?
Yeah.
Therapy practice. Your income is your patient billings.
Yeah.
And then you look at your expenses down here. She has office rent, Simple Practice, which is her practice management system. Psychology Today, it's a magazine that she may subscribe to. Professional licenses, insurance, mileage if she has to drive, right? These are typical expenses that you're going to see in a business. And the only thing you're doing is every month, you're going to crack open your bank statement and make sure that every transaction that hits your bank statement shows up here somewhere.
Yeah.
Right? You put the money that dropped in your bank account, all of the deposits, you put them up here in the green and this upper income section.
Mm-hmm.
Down here, if you see expenses going out, maybe your landlord finally cashed the rent check, Simple Practice pulled out your membership fee for the month. Whatever it is, all those expenses that hit your bank account, you want to get them all in here.
Yeah.
And then by the end, you add all this stuff up, you should have your bank balance. It should tie out exactly. Does that make sense?
Are you saying does that mean that you're assuming you have a bank account for the business and you're not using your personal one then?
Yes, and that's a good question. I would strongly suggest you should, and you really do need to, unless you have a sole proprietor. Again, going on that mindset where you may be doing some off consulting work every once in a while, and you don't have to actually go in and set up a business. And this is another thing I wanted to talk about, which is setting up the actual type of the entity.
Yeah.
If you're planning on growing at all, and you're planning on having employees, especially, you will need to set up your own business. That's not, and you want to keep everything separate. You want to set up an LLC or an S Corp, or maybe even a C Corp, though I wouldn't suggest that right off the bat. You want to set up something there, and you want to have a bank account that is just specifically for the business.
Okay.
So that is a great question.
So then, to play devil's advocate, if the bank account has, that's where your money's deposited, that's where things are taken out, why do this on Excel, and why not just lean on online banking and the statements?
Well, because eventually those transactions, you are going to have, hopefully, you're going to have 50 different deposits from 50 different customers.
Okay.
Right? And for some people, it's hard to look at, you want to accumulate those in some place where you can easily look at the financial data and know exactly what you're dealing with. And especially when it comes time to do taxes, if you're not doing some kind of a monthly reconciliation like this,
okay,
I don't think you want to go back through 12 months of bank statements and understand what all the different transactions were. Right?
So maybe if I'm picking it up right, doing this in Excel has two main purposes. One, to help you simplify those monthly statements, and two, to serve as an easier access for record keeping for taxes.
For taxes.
Okay.
And not only that, going back to the other questions, talking about investors and things like that, you're going to need to be able to provide this, because even though it says 2019 financial data, the 2019 financial data, this is going to be tough to explain, but the financial implications of what happened in 2019 are still going to play out in your financials as they exist in 2020 or 22.
Yeah.
There's still going to be some underlying on your balance sheet. We'll get into that in a little bit, but what you don't want to do is not have financial records. And when people ask for them, you say, I don't know. Yeah. I don't know what happened back in 2019. I guess we'll have to go back to the bank statements.
Yeah.
If you're running a business and you have those aspirations to grow and get investors,
yeah,
you want to at least start here. I recommend in general that people start with an accounting system like QuickBooks.
Yeah.
And we'll go through an example here in a little bit of just how to do something really basic in QuickBooks and how to navigate.
Okay.
But and you can get in QuickBooks for $20 a month with some of the basic modules. But in case you don't want to go that route initially, and you just you don't want to have the hassle of maintaining QuickBooks, and you don't want to pay the monthly fee, and you just want something really simple, this is probably the bare minimum that you should be doing. And
right.
My wife does this at the end of every month, and it's just a few minutes just to
Yeah.
go back through and track all the transactions.
So it sounds like maybe even a third reason is it just adds an extra level of awareness for you that by simply going through it, confirming numbers, it becomes more top of mind, so that in the process of simplifying it for yourself, you also kind of commit it to memory in a sense, or at least a portion of it, so that, like you said, if you do need to have those conversations, it's not this completely foreign thing where you are stumped on the spot, but rather it's, I might have to go through back to my records, but if I recall correctly, you can play more of that card as opposed to a deer in headlights.
Yes, no question. You want to be able to have these numbers readily available if anybody's asking questions.
Yeah. Okay, so you were just saying that green line at the bottom should reflect your staying balance in your bank account, and then that's kind of where I veered you off by asking about having a bank account specific to the business.
Yes, so that's it. I mean, you go throughout the month, and I was kind of messing with this earlier. I didn't make sure that everything balanced out. Again, this being an example. So
yeah.
The other line that I have here, obviously, your general accounting speak, right? You have your income, in this case, my wife's patient billings. You have income less all the expenses, which ends up net income, right? If you take your beginning bank balance plus your net income or loss for the month, you should tie out to the cash ending balance. And so that's all it is. The other thing you have to be aware of is what happens when you transfer money in or transfer money out to your personal accounts. You want to keep track of that as well. Just another thing to be aware of. And I would also recommend, when you do have your own business, to make sure you're touching base with an accountant, because it's like having a doctor or a dentist, right? Somebody just to make sure you're staying online. You don't need to be in touch with them all the time. Every 6 months or maybe once a year, touch base with your accountant and just make sure that your records are being kept correctly and that you're not getting things too far out of whack.
Yeah. So really quick then, with that row that you have titled transfers in, personal cash used, or transfers out too, is what you have there. So it could be a positive or a negative number on that row. How come, could you execute that the same thing differently by putting it under expenses, salary?
You could. And in some cases, and this is where you get into the different types of entities. When you have an LLC, it doesn't matter how much you paid yourself, because you're going to be taxed on the net income of that business.
Okay.
I should say specifically, if it's a single member LLC, you're getting into disregarded entities. If you have a multiple member LLC, I don't want to get too far down in a tax rabbit hole. Yeah. The answer is it depends.
Okay. Sometimes so how do you make sure you're paying yourself enough, that the business is profitable and the margins are high enough?
That's a good question. So let's pretend this account is completely blank right now. Right now, at least in these first few months, it's not looking so good. As we go throughout the month, we can see not even paying ourselves any money. The net income or loss line is where you really need to be focused on. Okay. And really, when you're talking about a cash basis business, this is either your bank account either grew or you lost money, right? This is a net negative $100 to your bank account. Now you're down $272, and now you're down, $819.64. Those first 3 months are looking pretty grim, and you haven't even paid yourself yet.
So how come? And this is a very just technical question about Excel, but how come you don't have those numbers showing, like you have in the column or the row that it's labeled loss, but why aren't those numbers showing up as negatives?
Where are you talking about here?
Just like there isn't a negative in front of that 100 in that blue row.
Oh, the parentheses also is an indication of a negative number.
Oh, got it. Okay.
Yep. So in this case, my wife did start, this is pretty close to reality, right?
Yeah.
my wife started her business in February. She started paying for a professional license, and she got insurance, and she started paying office rent, and she hadn't really received any clients yet.
Well,
And so
yeah,
like any business, you're going to
gotta
have
spend money to make money.
There's going to be a tough time there. And so you probably need to pull in some money from your own personal account just so that your business account can stay afloat.
Yeah.
But then as you start going here, this starts looking pretty nice, right? We start getting in a few clients, and all of a sudden we have a couple $1,000s in our bank account. And at that point, it's like, okay, you know what? Maybe I can start paying myself some kind of a compensation. Yeah. Now that I can see that the business is afloat, right? I can see that I'm not in the negative every single month. I can see my cash balance starting to build up. Okay, I think at this point, and you want to be cautious with this. If you don't have a type of revenue stream that's recurring, reliably recurring, right? You want to be careful because that cash may be needed to get you through some tough times if that revenue disappears. But at this point, when you start, again, just thinking from a small business perspective, you see that balance start going up. Okay, maybe I can start thinking of some compensation, some ways that I can put some money back in my personal account and actually feel like I'm making money here, right?
Yeah.
So the only other thing I'd say about this, and this gets more into the accrual world of accounting, when you're looking at cash basis, this is, again, the bare minimum. When you're looking at your income and expenses and knowing how much money you're losing or gaining every single month, the financial pieces that are being missed here is what's happening with all the other financial stuff that's out there that hasn't had any cash implications yet.
Okay.
And you think in the case of patients, well, I saw 50 patients this month and only 10 of them paid me.
Yeah.
That's not a great situation that you have 40 patients, especially if you're a new business or even worse, a new cash strap business like so many are.
Yeah.
And you have 40 patients or 40 customers out there that you've provided services or you provided product to.
Man, you think of how many service-oriented businesses that's the case?
That's the case.
Yeah.
Right. And so that's what this is kind of missing. And so the other piece that I would add to this is if you're going to do this, I would also keep track of what your customer billings are. And I built this out. We got KCB, we got Jordy T, we got JPG, right?
I like it.
And so here we are. We're all the patients of whatever I call this business of, we all go to positive growth therapy services. All the stuff that's going on right now has us beaten down. And so we need some help, getting our minds right.
And nothing wrong with needing some help, right?
Yeah, no question. And so here we are. We've all been to therapy a bunch, but some of us have paid and some of us haven't.
Yeah.
Right now, Jordan, I'm not doing a great job about paying, right? KCB, you've done a great job. You have nothing unpaid.
Yeah.
You've paid for every session so far. You have nothing outstanding. Jordan's owes the business $600. He still owes, or he's given $600 of business to this therapy practice, but he's only paid for $200. He still owes $400. And Jake's in pretty good shape too.
Mm-hmm.
Anyways, the point being, keep some kind of a ledger that shows what customers you've sold product or services to.
Yeah.
And what's owed from those customers. Because this right here, even though, again, like I said, this being the bare minimum, helping you keep track of the numbers, you don't have the financial picture in front of you of who owes you money.
Yeah.
And I should say also on the other side of that, I don't have anything written up here, but if you still owe your landlord for 3 months of rent, that's something that you probably want to remember and don't want to get too far out there. If you're buying inventory and you're getting, you're stockpiling all this inventory you're trying to sell to customers and you haven't paid for that inventory yet and you haven't done so for months and months, that's going to jump up and bite you really quick.
Yeah.
And so this is getting us into the importance of accrual accounting.
Yeah.
Cash accounting is this, right? Cash comes in, it's income. Cash goes out, it's expenses. But when you get into accrual accounting, you really are able to see the full financial picture and know about all these other financial things you really do need to be concerned about that you can't really see when you're looking at cash basis financial statements.
Okay, so real quick logistical question.
Sure.
Would you recommend setting up your business bank account same time, ahead of time as you do your LLC, S Corp, whatever, however you set that business up?
As soon as you got your business license and had your business name and your business EIN, as soon as you have all your business documentation from the state and the IRS nailed
So that
down,
comes first.
you have to do that first because the bank's going to ask for it.
Got it.
And so I would say the next thing, as soon as you do that, go get yourself a bank account set up, because then that allows you just to, and we made the mistake, of having to kind of commingle when we first started my wife's business. She went out and paid for a whole bunch of stuff, and we had to go back through our bank statements and figure out what was business. And it wasn't always straightforward because it's not like the charge that comes through our bank account says this is therapy related.
Yeah, and it could be that maybe you went to Walmart and got groceries, but then you also got office supplies.
$100 worth of supplies. It's like, where are we going to
all
find
on
that?
the same ticket or receipt.
So yes, on a very small scale, when you're getting started out, again, recommend as soon as you get all that documentation that your business has been set up, go to the bank, set up a business account. It's very little, if it any money at all. Yeah. It just helps you keep things straight.
Yeah. Okay, so
that's about it on the cash basis accounting.
Yeah.
And I do think that's helpful, just so people can see, like, okay, I think I can build this, or at least I know somebody that I'm sure you people out there can know somebody. And if not, if you don't know anybody that's great at Excel, you could grab somebody at a local accounting firm and have them put this together in 20 or 30 minutes.
Yeah.
And again, you should be building that relationship anyways. And so that'll be a great resource for you just to get this started, and also have that continuing relationship where you have somebody that always has their eye on your books.
Okay. So then maybe the next question is, how are you ensuring that your business is viable?
Okay, great question. So, and that ties into what we were just talking about as we've been looking over this whole thing.
Yeah, making sure we're not at a loss, and
making sure we're not at a loss. As we're looking through this income statement, this monthly income statement, again, we're looking down here at net income. The first couple months, when you first start off, and most businesses are not going to start off right away with income.
Yeah.
Because it takes time for you to get people aware of what you do and what you offer and why your product is, what differentiates you from all the other people that are doing the same thing out there. It's going to take a while for that income to come trickling in. So I wouldn't be at the very onset of starting a business. I wouldn't be too concerned with losses as long as they're not increasingly, as long as these aren't growing at a crazy rate.
Yeah, I mean,
right?
You've got to invest a certain amount, like we said, you've got to spend money to make money in the beginning. There's that immediate cost of setting up that LLC or S Corp. There's the immediate cost of setting up the website, getting your inventory, getting those licenses, whatever type of business you end up setting up. And that's just going to be the case. It's just how it comes out in the wash, right? When setting up a business.
Right. And so the financial viability is exactly this. I mean, that's what you're trying to do is look at this and be able to see it for yourself, right?
Yeah.
Looking at the numbers, and I've tied these out to my bank. I know exactly what's happening. I know this is right. Looking at this, and if you weren't seeing some sort of a positive trend here, it may be time to, go back to the drawing board and think how you need to adjust.
Well, so then how would you recommend to then, if we're going to go back and talk about margins and paying yourself, how do you recommend really dialing in your pricing?
Dialing in your pricing is going to be, well, partly it's a marketing effort, right? It's going out there and seeing what people are paying for with similar types of products, and even maybe doing some surveys if you have a target customer group that you're looking at.
Yeah.
Talking to them, and especially if you can find people that you trust to give you true feedback on what would you really pay for this product. I believe this product, here's what it does. If you had this, what would you pay for it? And hopefully you can get some positive feedback, and again, having those conversations and talking to people out in the marketplace, and looking at what's going on with competitors or similar products, you can kind of gauge, right, what's an available or what's a possible price point. Yeah. And then comes time to, okay, look at that and think forward to, okay, how many customers do I really think I can get? And when you're first starting, you don't know, right? You're guessing. And so you're going to end up with some of these really bad months when you start out. You're going to have to kind of play around. You may decide that, $100 is great. It seems like a good place for my product. I think I can sell a lot for $100.
Yeah.
But then as you go down the road, you realize that you're having to spend a lot more than that.
Yeah. And then you evaluate those things. Like, can you get more scrappy? Do you absolutely need psychology today? Or, there are certain things that you will have to have. Like with your wife's example, right? She has to be licensed. But you can get creative with other things. Or I interviewed someone recently for the podcast who is launching a brick and mortar, and he did a lot of research into the types of things that he would need to purchase to fill his space in order to provide the services he's wanting to provide. And he realized that a lot of them were rather expensive. And so we started doing more research on how to, and that's where you get creative, right? So that you can stay in the red.
Yep.
Yeah.
And so when you're starting a business, you're testing this out. You're trying to figure it out yourself. There's not a great answer to say, when you first start a business, here's how you establish the perfect price point and not get yourself into a loss situation.
Yeah.
It's going to be trial and error. You're going to probably end up with some losses until you can really dial things in and figure out what customers will really pay for your product in its current state. And you're going to have to balance that against all the expenses that you currently have to incur just to get there. And at some point, if you look at this financial statement, if you have 12 months worth of data about what's happening, this is another component. This isn't considered accounting. It's considered FP&A, financial planning and analysis and budgeting, which is, another financial department. Accounting deals with what's happened in the past. Financial planning and analysis looks at the future, right? And so if we have all these numbers from the past here, we can gauge pretty well what's going on or what's going to happen in the future.
Right.
I'm seeing these kind of numbers. You know what? I think with a few with a marketing campaign, or maybe I get out there, maybe I can double this by the end. I'm pretty sure I can.
Yeah.
But if I double it, that means I'm going to have to, obviously I have to launch another marketing campaign, and maybe in Psychology Today, that's going to increase. You can play with these numbers and looking forward just to give yourself an idea of what the financials look like in the future. And that'll probably give you a good picture at your current price point. Maybe it's going to work. If you get yourself, like our business, right? Like any kind of recurring revenue software startup, they often start up with huge losses, right? Because there's so much money that goes in to sales, marketing, developing the product. But eventually you look at your growth patterns and what's happened over the last few years, and you can see in the marketplace that there's plenty of room to grow.
Yeah.
And if you continue to grow similar to where you have been, eventually you're going to be back in the black, right? You're not going to be in losses forever, but you have to have that historical data tracked here to know kind of where you're trending to in the future.
Yeah, for sure. Which is another good point to be had in terms of business planning. If you are, depending on the goals you have for your business, if you're able to then have those predictive models to show, because of what you've done, where you think you can go when talking to any sort of investors, whether that be venture capital or banks, that's highly valuable. Yeah.
So it's lots of fun. There's lots to do. You can get yourself completely lost in this. And when it comes to the point where you feel like, again, you being the entrepreneur, and you feel like you're spending way too much time doing all this stuff, it's time to hire some help.
Yeah. Right? And that is such a great sign of growth. It can be daunting and scary, but exciting as well. Yeah, I like that.
But if you can do something this simple, right? Just have a spreadsheet like this. again, I recommend that people do QuickBooks right off the bat, because that prevents, eventually you're going to have that kind of a system anyways.
Yeah.
And if you have that system right off the bat, then you avoid the hassle of having to import years and years, possibly, of financial data into the system. So that would save you that hassle. But if you want to just start out with this is great to help you get started. And when it has to go beyond this, when you need more financial data and you don't have the time, that's when you hire people like me.
Yeah. So do you have any recommendations on like payment processing tools, things that are a little bit more kosher? I don't know if like Venmo is kosher or not, or if that's a totally
yeah, I mean the payment processing platforms, I mean there's so many of them out there, right?
Yeah.
And not all have not all the payment processing platforms out there can give you integration into everything else that's going on in the business. To start out, I mean, Weave has obviously a payments processing platform. I mean, my wife's, we're in discussions to see if we can figure out something for my wife's business as well. She's, I can't remember who she's with, but definitely the merchant processing rates that we're getting at her business are not great. And so we're seeing if we can work something out with Weave there as well.
Yeah.
But for you to collect cash from patients and record these numbers up here in the green section, most people are going to pay by credit card. So I know that Weave has a great solution. Off the top of my head, I don't know what our rate is, but I do know that our customers that come to us and talk to us about it, they look at our rates compared to what they've had in the past, and it's almost a no-brainer.
Oh yeah. Well, and Weave is really good that way. With our payment processing, we've partnered with Stripe, so it's really secure. It is a very competitive rate. I know that those rates can fluctuate a bit, so I hesitate to share a specific number there. But to complete the Weave plug here, some of the things about this, right, are things like being able to see those overdue payments really easily within the product, which you highlighted, which is, and not just see them, but with Weave's tool, you can send a text to pay link. So they can, from a link on their phone, pay you, and then you save paper costs. You kind of save a lot of running people down. That's not the right phrase.
No, you run them down. Did you see me? I mean, you saw my numbers from.
Yeah, you're a terrible patient.
I'm a terrible patient. I have not paid my bill. If you don't want to, I don't want you to be chasing me down. I mean, as much as I like going to therapy, I don't want to have my therapist and some big dude with a bat show up at my house asking for money.
But you think
it really is such a great, I mean, most businesses out there, what they have to do is they have to print off some invoice, they have to get a PDF. If you don't have a system like QuickBooks and you're just going to do this, you have to make up some PDF and you have to put it in an envelope, and send it off.
That's time and money. And then even like, you think of like, and we've talked about this in previous episodes about meeting people where they're at. When they get a piece of mail, they're not necessarily right next to their checkbook or whatever may be the case to make it the easiest thing possible to fulfill that request of paying you. But then
I think I threw my mail in the trash today. I don't even think I looked at it.
Oh, that's so terrible.
I think I was just, it was so cluttered. It was so cluttered with all the advertisements. I probably should have checked to see if there was something legitimate in there, but there it goes.
I mean, that happens, right? Or even our email. I'm terrible with my personal email because I'm in email all day with work. The last thing I want to do is check more emails.
Yeah.
And so the text to pay link is just so brilliant because the barrier to entry is so low. Several people on their smartphones already have a credit card linked up to their device. So yeah, that is a great tool in terms of payment processing.
Agree. Yeah. I mean, our so far, it's a fairly new product for us at Weave, but it's taken off fast. I mean, people see the value, and you combine text to pay plus our merchant processing platform and how much time it saves them and not having to send out that sweet envelope that I probably just threw away this morning.
Yeah.
Yeah. It's a no-brainer. People are loving it.
Yeah. Well, I think you've given us a good little rundown of things to consider in these first 3 days and setting us up for success. So I appreciate that, Jordan.
No worries. It's been a lot of fun.
Well, good. You've been a good sport.
Thanks for your time. Again, one last look. Don't forget accounting, right? Assets plus liability, or assets equals liabilities plus stockholder equity. That is the first thing you're going to hear in any accounting class. I just thought there you go. Just keep
There you go.
You don't know what to do with it right now, but that's okay.
Maybe we'll revisit that in another episode. Okay. Thanks, Jordan.
Okay. See you.
Thanks for listening to that episode of We've Connected. Make sure to hit subscribe down below so you get notified of any time we add a new episode. We'll catch you next time.